What's going on, guys? Ben here. I hope you're all doing fantastic. So in this video, I did record a video yesterday regarding top-down analysis. However, I will show you the error that I made very shortly, and it's an error that is crucial that you do not make, because if you do make this error, it could have detrimental results on your trading, because you may potentially take a bias in the wrong direction, and that could have disastrous consequences for your trading. So if you can see here, guys, this is a trade we've taken today. We've just put this into the paid VIP group. All of these trades have been in the VIP group, actually. We've done 14,000 pips in the past 2 days just on US 30 alone. And if we go on US oil, I mean, guys, the results speak for themselves, and it's pretty annoying now because the chart isn't loading. There it is, look. There we go. Entry, snipe. And look at this. Absolutely knocked that one out the park. I've cleared the charts though from yesterday. We had some trades on there from yesterday, but what I want to do, guys, is show you how to find entries like this reading price action, and it all starts with the higher time frames. So we start on the monthly time frame. I'm going to show you exactly how to break price down, going right down to the 5 minutes. So you can find momentum trades like this. You know, we find a break in momentum, we find a break of structure here, we find price pulled back, but it doesn't break the low, and then we find price continues up. I actually entered here because I had on the lower time frame, I had a break of structure, and I entered here. So I had a break of structure, 2 breaks of structure, and then I had a retest here, and that's where I entered on this retest, and then the wicks just started going a little bit crazy, just like ranging in between each other. But as soon as I dropped that trade, it went straight to 600 pips. So then I took some partials, and then it went into drawdown. I held on with my partials, and then as it came out of drawdown and structure started breaking, I bought more orders in and stayed in until this point here, because when we get up to the order block level, again, this is where you're going to find some potential resistance. So you always want to be partialing out, guys. Profit-taking strategy is so important. Right, anyway, so let me just zoom out a little bit. And in this video, I'm not going to teach you, go in depth on harmonics or anything like that. It's literally just like a raw price action, top-down analysis video, where I show you how to read price from the monthly going all the way down these numbers here to the, well, we can go down to the 1 minute if you like. Let's just see how the video progresses. Right, I'm going to use US oil for this example, not this one. I'll go on to a fresh US oil. And the reason I'm using US oil is because I'm going to show you the mistake that I made yesterday, and it's a schoolboy error, and I couldn't believe it. I recorded the video and watched it twice before I uploaded it, and then I uploaded it, and then I realized the error, and I was like, oh my god, what is he doing? If anyone that knows how to trade sees this video, they'll be like, what the hell is this guy talking about? He's got this completely wrong. I even thought of leaving a note in the comments. I was like, no, I can't leave it, because if people don't read the comments and they read price action like this, it could screw up their trading. And it's so important that you get the correct knowledge when you're learning how to trade, because if you don't, that's another big downfall in the industry, is knowledge is passed on incorrectly, and then people get poor results. So what we're going to do is, there we go, clean the chart. So what we can see here, guys, we've had a bullish push again today. You've just seen that on the other oil I showed you. But if we was just looking at this chart, we're just coming to this chart right now. What we can see here is momentum line. Draw it through. You can see a break in momentum. Where the break in momentum happened, we did have a pullback, but then we had another push up, where price broke again. So we could actually draw another momentum line through there. We had a break in momentum, and we actually had a break of structure as well right here. So I'm going to just mark up MB, not in there, MBOS. MBOS. There we go. So monthly break of structure. That's just so I know what the hell I'm doing when I go down to lower time frames. I can use that as like a point of interest. So I'm going to leave that momentum monthly trend line there. You'll see why later. Weekly time frame here. Now this is where the error was, because I was literally just talking about the monthly being bearish, which it is. Now it's bearish because it's broken structure to the downside, and we could potentially be getting a downtrend after this. Now look, we've got a pullback here. Now as long as this high doesn't break, and next month we get a new candle above, then we've gone from high to low and low to high, so then we've gone back into an uptrend. But because we've still got a lower low here, price is broken structure to the downside. So on the weekly chart, if we go down to the weekly, what we see the weekly is bullish. Now, if we line this up here, we'll just put WL for weekly low, and then we put we'll just put weekly high here, weekly high up. Now, what you'll find, guys, is sometimes you'll find daily bullish, weekly bearish, hourly bullish, 10-minute bearish. And that's because, guys, price action works like this. So price action will be going like this. So for example, this is weekly, and then in the daily price action, we get price action like this. Daily bearish, like this. So I like to trade with higher time frame momentum. So say for example, you can see here, say for example, the weekly is bullish. I would like to take trades here, so I'm trading with the higher time frame momentum if I'm trading daily. And here again, I'd like to buy, because we're buying with the higher time frame momentum, we're buying with the strength of the market. So, let me just delete that. What we can see here is the weekly is actually on an uptrend. Now, it could just be on an uptrend to fill the monthly downtrend pullback, as you saw there. Let me just draw that diagram out again really quickly. So we could say that this is the monthly uptrend, and then we have the weekly like this, up, down, and you can see it could be there just to fill this, and then we start going down again like this. A little bit of a messy drawing, but it's just so you can see the weekly can still be bullish. Sorry, we're on a down, aren't we, on the monthly? So you can see the weekly can still be bullish. For example, here on this side, got that backwards. The weekly can still be bullish because what it's doing is it's filling the space on the monthly chart. Not the best description there, but it should make sense. If it doesn't, drop a comment in the comments and I will go over it again. So what we can see here is on the monthly, if we go to the monthly, go back to the weekly, we've got a nice looking order block here. Now you could say, well, why isn't this not an order block? Why is this? So I class this as a potential order block, guys, because number one, it has big candles following the order block. Now you can see order blocks when they have a big candle that also breaks structure. This is what happens when basically the institutions put orders into the market. They hedge them in and they put them in slowly, so they don't just move price, 1,000 points down, 1,000 points up. They're putting hundreds or thousands or hundreds of thousands of lots in, but they put them in slowly. They hedge them in, then they take the hedge out, and then the price drops one way, and then they're in a minus, and then they take the profits, and it brings the price back up. So what happens is when they put all their orders in here, they bring price all the way down, then they take the profit, they hedge it down here, they take the profit, and then they're in a big minus. So then they've got to bring price back up here again to mitigate this order block. So once that's mitigated, they then come out or break even, and then they can continue in their original direction, and continue making profit. Whenever you see a block like this, and there's lots with big candles afterwards, bullish or bearish, it doesn't matter, with a lot of imbalance as well, then you know that's a potential institutional move that needs to be mitigated. So when they bring the move back to mitigate the previous hedge that they've hedged in all their orders into the market, you know that once price touches that zone and they're finished, price will then continue in the opposite direction. So because monthly's broken to a downtrend, we would then expect monthly to pull back and continue into a downtrend again. We would expect monthly to break the monthly low, which is here. Based on the weekly, we would expect the weekly to continue on the weekly uptrends, on a weekly uptrend. However, we've got to consider the higher time frames. The higher time frames are always more important than the lower time frames. That's where it comes in, where we start bringing the time frames together. So this is where we need to put the time frames together and build a story. So right here, and I've done this deliberately. So we have got, if we go between the price here, not with that, with the Fibonacci, we have got an 886 pullback. Now with harmonics, I draw harmonics to the wicks, but with the Fibonacci, I like just to draw it with the candle bars. For me, it's I'm going to say it's just more accurate. It's just what I've always done. If you actually draw it on the wicks, I mean, the zone is pretty much in the same place anyway, so there's not really that much difference unless you've got some crazy, big manipulation or some crazy wicks going on. So we can see here, if we go down to the daily, we've started to build some confluence now for a potential reversal. So what we've currently got here is a monthly 886 pullback with a bullish, obviously, weekly trend. The weekly trend is bullish, potentially to aid the monthly pullback before we get the monthly continuation. So what we would look for here on smaller time frames is potential reversal patterns in this area of confluence, because between the 886 and 786, it's what I like to call like the golden zone. It's the pullback in between a certain impulse leg, like this. This is the zone here, so for example, where you would want to be looking for potential entries here. And you can see here, if we zoom in, this candle here mitigated perfectly into there. And if we do the Fibonacci between these levels, we'll probably see that it's going to be, I do that all the time with that, probably going to see that it's, around the 886 or more, like price finished, like it wicked down into it. You see how it wicked down into it, but price finished, just above the 886. So here, would have been a perfect place to look for buys, trend continuation trades on the weekly. Yes, we'd have been going against the monthly, but trend continuations on the weekly, with confirmation here, and especially as we go down into lower time frames, you'd have found some brilliant entries, and I'll show you how to take entries and stuff like that later on. We just look for lower highs, etc., etc. So, but first, what we do is we need to find position of price. So, price needs to be in a location, our zone of potential reversal or continuation, and that zone is between the 886 and 786. Sometimes people use the, let me just take this fib and this fib off. Sometimes people use the 618 as well as their golden zone, but I stick between the 786 and the 886 for me. It just seems to line up better in confluence, and it seems to line up better with supply and demand zones as well. So when we get price in this zone, it's a really good place to start looking for reversals. So we use the higher time frame to determine where price is and find the zones of potential reversals. So what we've done so far is we have found an order block here, a big order block on the weekly, and that order block that pushed price all the way down here has a lot of strength. Last time price was here, look how much it pushed price down. And if it is an order block that just needs mitigating, then we will see price come somewhere into this level. We can refine it on the lower time frame, and then we'll find a reversal, and price will continue to go down and make a smaller double top, or it might come up further and make a double top. Because you've got to remember, on the weekly, it's a long time. Price could still go all the way up here and then finish down here before the end of the week, and then that weekly candle would finish here, and then the wick would be up there, and then obviously we'd be measuring the wick. So we've determined our zone for potential reversals. This is where we're going to be looking for reversals. If we go down to the daily time frame here, the first order block that we're looking at is a small one here. This influenced this first breaker structure, and then the main one here influenced that big breaker structure. But this zone here is where the price actually started moving downwards and started breaking structure. So this zone, we're in the perfect zone now to now continue to fine tune this. Let's go a little deeper. I can also see a harmonic in here as well. So we are in the monthly low about there, aren't we? 786. So this is our supply and demand zone here that we're in. I'm just going to mark this zone here, S and D zone. Let's go back to the daily actually, just so you can see. And you'll see the daily, look, the daily is also bullish, broken structure again, bullish. And the daily is bullish, again, like the weekly is bullish, potentially to fill the monthly downtrend pullback. Or if it breaks the highs, and then we, it can potentially have an uptrend continuation, but we'd find that if price did this, and then it uses the support as resistance, and it starts going the other way. But ideally what we're looking for on the lower time frames is something like this, and then lower high, and then it start breaking down the other way towards the direction of the monthly bias. So daily here, we've still got a big daily bullish candle, so let's refine this a little bit more. So we can see here, we've got a nice curve there. Whenever you see a curve pattern like this, it's always a really good indication of a potential bullish push, because what you can see is it's basically sellers turning into buyers. And then you can see the structure gets broken. Once the structure gets broken, sometimes this is how breakouts happen. Like if you see this on smaller time frames, it's very, very powerful sometimes. And watch this, guys. You can backtest and go find these patterns. But when I like to see these curves, I always like to, keep an eye on them and, trade them. It depends. I zoom down on low time frames more, because sometimes you see like a cup and handle pattern. We almost have one there, actually. That's for another video though. Were basically like this, and there we've had a breakout of the breaker structure there. So we had an impulse, and we could have traded this here, because we had a breaker structure up, and then price came back down, broke structure again, and started breaking to the upside. So we could have entered around here somewhere. Actually took that long. Let me just delete this. But that's lower time frame analysis. Right now I'm just showing you how to identify good locations for reversals. So I think the 6 hour is looking pretty good. Let's just zoom out a little bit on the 6 hour. And by the way, guys, everything I'm showing you works. Like in regards to harmonics, in regards to structure, it works the same on every time frame. So don't think, oh, just because it's on the weekly, is that the only time frame? No, it doesn't. It works on literally every time frame. So we've got a potential, this here, go from the high, 886, 886 move here, move you down a little bit, gone a little bit higher. Well, basically we've got a back there, a back pattern, so that gives us another zone of confluence for a potential reversal. Now there's two back patterns here. I'm going from just the weekly high level. If we use the wicks, then price is indicating that we could go higher. Now remember what I said earlier in regards to the like the weekly, for etc, etc. Just because it's in this zone, it doesn't mean to say that it can't go any higher. It can go higher. It can go a lot higher. It can be manipulated all the way. It could do this literally, like in one day, like that. But as long as it closes here by the end of the week, the candle close will still be closed underneath the monthly downtrend high, so that it will still be on a monthly downtrend. If there's orders to mitigate, there might be liquidity trapped up here that they just want to wipe people out of the market that have caught this sell. People that move the markets to all kind of crazy things. So this is what we've got to look out for. So you can see here, look, we've got a potential imbalance to fill here, which lands perfectly on the next D point, more or less, of the crab, if we're using the true high to lows. So this is again a very nice area of confluence that we're going to look for reversals here on a lower time frame. So if we go down to the 3 hour, you can see here, I said earlier, we've got the nice curve, we've got the breaker structure there. So what I'd really want to see now is to take this into reversal. I would want to see this, a retest, and then I would buy this up to the D point. And then what I'd want to see is rejection from the D point, a lower high from the D point. I would take that lower high there, by the way. I would take partials at this point here, because then we'd probably get another rejection, and then I'd wait for the break, and then I'd wait for the retest that previous line, and then I'd sell again after there, and that'd give me two ideal high probable sell areas, and that's just taking it, swings from the 3 hours. But there we've already got confluence. We've got the location of the price in general. It's at a strong place. It's inside a strong supply and demand zone. The location of price, we're in a 886, 786. We're in the golden zone for continuations or reversals. And if we go down another time frame, so now we've determined all of this here. So we now have determined that this is our potential PRZ. So what we want to do now is look on the lower time frame for potential entries. So now we've got all of this higher time frame stuff out the way. We don't need to be on the higher time frame anymore. We can go down to the 1 hour, have a look what's going on. So what we want to do ideally now is we want to see a bearish push, and we want to see some form of rejection off here. If we see rejection off here, if we see this support turn into resistance, we can actually take a trade off there. Like if we get lower high, if we get rejection, if we get wicks from there, we can take a trade up there. And I mean, it's still some pretty decent pips. I mean, there's 200 pips there, or 2,000, whatever you want to call it. It's still a 2% trade. And then what we want to do is we would want to partial out. Let's look to the left of here. We've got as you refine things, you'll find that the imbalances and stuff refine, and you can refine your trades a lot more. So as we get to this order block here, this is our PRZ, we would want to be taking partials. Normally I'd be taking partials at like the 50 or 500 pip level on indices, because I work with big lots. So I trade intraday, I trade all of these impulses and retracements, or as many as I possibly can get into that give me confirmation. Like you see this, look here, this practically filled an imbalance. This would have been a very nice pending order. You saw price push down and then pushed up, and then it broke the high there. It broke structure, and it came back and it gave another push, and we had another mitigation there, look. Another mitigation, so we had another buy opportunity there. And again, another push up, break a structure, pull back, mitigation, buy again. Break a structure, pull back, mitigation, buy again. So if we refine this a little bit more, what we want to do now, say for example, there's one indicator I love to use, and this is measuring out basically the Asia zone, because the Asia zone can act as a nice zone of confluence. And I just remembered the Asia midline doesn't actually work on the US oil chart. So, but what I'm going to show you, just for an example, I'm just going to show you. So what you can find, you're going to use like the highs and the lows of this as confluence. So I'll show you now on the US 30 chart, actually on the lower time frame. You can see here, let me just remove some of this drawing. You can see here how it acted as a strong liquidity level. Price induced buyers throughout the Asia session here, and then boom, it went down. Oh, sorry, let me just delete that. So price induced buyers, so people would have been going long here, and that had the stop loss, you know, in the Asia session, wherever, under here, and then obviously bang, we get the big drop. And you see again, Asia session consolidation, we take buys off the low, and then we get the manipulation, which again, if you look left on, if we refine this down, we've got this, I've got a lot of drawings and lines on here actually, make it pretty confusing. But you see why I took, I missed this. This was today's trade that I actually missed. So I bought in this morning. You basically, let's go down to the 10-minute time frame. I bought in 2 trades this morning. So what I saw here, again, breaking momentum. Well, I love to trade breaking momentum lines on the 10-minute and 5-minute charts. And then we want to look for where the wicks are going. You see, we had this big wick here that went into, if we zoom in further, that wick would have mitigated, yeah, look. If we zoom in a little further, that wick would have mitigated something here. There's a little bit of manipulation there for people's stop losses, etc., etc. Actually, my stop loss after I took partials, that's why I took a second order up here and got back in once we had a breaker structure again, because you get a lot of manipulation on the indices, guys, so you got to be careful. You know, sometimes, yeah, you'll catch 1,000 pips or whatever, or 10,000 pips, but it's always good to take profits early, because once you've got confirmation like this on the lower time frame, like you've got the breaking momentum, you've got the breaker structure, the pullback, 9 times out of 10, guys, you can take it with confidence that you're going to at least hit 300 pips, and I'd still say 85% of the time, you know, up to 600, up to the 600 zone. You can check my results, guys. In the whole of December, I made, I think it was 2 stop losses, you know, and sometimes I'm dropping 5 to 10 of these US 30 trades every single day. You know, like here, look, breaking momentum. This is lower time frame stuff. So breaking momentum, And what we got is we didn't get a break of structure on this time frame, but we got a pullback. That wasn't a confirmation for entry there, unless we had some form of liquidity over here. Nope, not really. Unless it was filling something, filling an imbalance. Yes, it did fill an imbalance from yesterday. If we look, it did fill an imbalance actually from yesterday. But just looking at the lower time frame stuff on here, because we haven't marked this up on the higher time frame. Well, I have, but not for what we've just been through. Look, I'll show you. I'd need to go through it all again. It's a little bit different the way I've done it. If you watch my previous videos, I've actually, I'll leave a link to it, the US 30. The previous video I've got to this, I walk you through me doing this full diagram here, and I basically predicted this before it even happened. And basically we've got a strong supply and demand zone here, and we caught this trade here on the way up, and I was waiting for price to break or bounce this level here, and price broke, and when price broke I was waiting for it to hit the next order block here, next zone of supply and demand, and then obviously if it breaks that, it's going to go then to the daily support line and test this here, because there'll be a lot of liquidity trapped around here as well. And we've got this another order block here, look. So if price comes down here, it'll probably come to somewhere in between this zone, and then it'll have a big push up next. That's probably what will happen next. But if we just go back, just do some lower time frame momentum entries while we're here again. So here I didn't want to take any sells until this area had broken, because I still had a lower time frame bullish bias. I actually took a buy, what was it, here, but I only got a few pips out of it, and then price started breaking, and then once price started breaking past here, I knew that it was going to drop to the next order block. And then as soon as price came back into the range, and we had the New York Stock Exchange open here, we had like a false move up here. Look, the curve I was just talking about there. This would have been literally a lucky move if you caught this, because there wasn't really any confirmation for this. Again, look, we've got the Asia low here, so with the way price was already reacting, you see the wicks, etc., etc. Like, and you see it again come down into this zone and not really breaking that level. It looks like it's just mitigated something here. You'd be expecting another bullish push. We had a big manipulation drop first on the open of the New York, which, you know, probably wiped out a lot of people. But then we had probably another mitigation over here somewhere, and then, as I said at the beginning of the video, how I took this trade, we had, you know, two breaks of structure, lower, higher low, higher low, and then a pullback onto the basically like new support line, and then I took the pips there, took partials, went into drawdown, and then obviously when we started breaking structure again, I bought back in, partialed out here and partialed out there, and then I've just left that trade now, just running with a tiny little bit of profit. So let me go back onto the, actually let me go back onto the US oil again, because I've got a little bit more lower time frame stuff on here. Again, I was following this bullish channel up here, just a lower time frame momentum. I'd already marked out the higher time frame stuff, as you saw earlier. But once we got price breaking to the upside here, it created a resistance point. And then once we saw price break resistance and retest resistance, we knew then, with a high probable, that it was going to give us a bullish push. So I bought in here, price messed around a little bit. And then this was the next point where I was looking basically to take some partials out. And as you see, it smashed through there, it came back, ranged, it was building liquidity, and then dropped again, came back to entry, but still stayed within our supply and demand zone, or our new resistance, shall we say, support, sorry, that was resistance. Rejected off here, and look, if you look again, that wick perfectly mitigated the order block, boom, and then we had a big push up there. I actually missed this second move because I went out for a walk, so yes, very, very annoying, but never mind. But yes, I hope, guys, that that's made a little bit of sense. I tried to, you know, I hope I haven't rushed through it too much for you guys. You know, I was trying to keep it short and sweet. I have got a lot of material, you know, coming out, free courses, paid courses, etc., etc. obviously the paid courses are going to be doing like one-to-ones and lives, you know, because all of this, you know, it's just repetition, guys. You know, you need to just keep doing it and doing it and doing it, following the same strategy every day, marking your charts the same every day, you know, from the monthly down to the daily, down to the hourly, and then just watching how price, you know, reacts within each of those time frames, and then using your fib as well. And all this will come together, guys, when I start launching the content and material and stuff. So if you're confused, you want to see anything else, guys, drop a comment in the box below, and just let me know, guys, anything you want to see, anything you think I'm missing, and I'll make sure it's done for you. So again, here, look what we'd want to see to potentially take this short. Number one, we're in our supply and demand zone that we marked out earlier, remember, on the higher time frame. We're looking for that pullback. We could trade that pullback potentially if we get some confirmation here. What we want to see is a break of structure. So we've got a structural point there on this time. We'll zoom out one time frame. So we've got it hasn't broke the highs. So we've got this structural point here. Ideally, we want price to start breaking down towards this structural point here, and once price starts breaking down here and breaking through here, and if it gives us our signal to sell, so if it gives us a lower high like this, then we can sell down to potentially this zone here, which is going to cover off this imbalance that you can see on the lower time frame that we were just speaking about. Cover off the imbalance. This is probably going to come somewhere near here, back up to where it was, push back down, build liquidity, and push up to the PRZ, which then obviously lines up with our higher time frame confluences, of which then we can, you know, look for these kind of patterns again. Once price gets up here, we can look for, you know, rejections like this from supply and demand, and take orders from here. And with these orders here, there'll be mitigations, and you can see them with your fib when they happen. So this, say for example, momentum, we get a break in momentum, and then you can use your fib literally to mark out. You can use the 618 if it stalls at the 618 and you get reversal confirmation again. So if you get something like this, a mini double top, or you get, you know, a couple of hits to the high, then a lower high, you can take it again short, etc, etc. But there's a lot more to go into on lower time frame entries. I just wanted to give you a bit of higher time frame to lower time frame salsa, just to help you guys understand price action a little more. So I hope that's made some sense for you guys, and yeah, if you've got any questions, leave them below, and have a good day, and yeah, speak to you soon. Anything you need, please subscribe, please like, please share, and help me help more people. Thank you, guys.